Hope you can hear me clearly.
Yes, I'm coming.
Okay. So today we shall be looking at taxation of estate, trust, and settlements. Taxation of estate, trust, and settlements. Taxation of estate, trust, and settlements. How do we tax estate? How do we tax trust? How do we tax settlement? The summary view of this topic is when a taxpayer is now late, but the business that taxpayer is doing still continue to go on. The business is a going concern. At the end of the year, they will be making the profit from the business even after the demise. Please, let's mute our audio. Let's mute our audio. So the whole essence of this topic is how do we tax the income of deceased persons if after the person is late, the business still continue to generate profits? That is the whole essence of taxation of estate, trust, and settlement. Before we go further, we need to define some relevant terms. We need to define some relevant terms. What are the relevant terms? First, what is a trust? What is a trust? What is a trust? Trust is an obligation binding on a person called trustee to deal with a property over which he or she has a custody for the benefit of a person called beneficiary. Trust, some people call it as an arrangement whereby the property or estate of a deceased person is managed by a person called trustee for the benefit beneficiary. Beneficiary, they are the one that benefit from the estate, from the property of the deceased person. They are the relative of the deceased person. They are the children of the deceased person. They are the beneficiary. So trust is an arrangement where the property of the deceased person is managed by a trustee for the benefit of a beneficiary. What is trustee? What is settlement? Settlement simply means an amount or part of the estate set aside or to another person as contained in the deed of an assignment, as contained in the deed of trustee. Settlement simply means when part of the estate of the deceased person is set aside or is transferred to another person as contained in the trust deed, that is settlement. Settlement simply means when the deceased person said after his or her demise, his property should be shared among the children. The means of sharing that property is called settlement. What is an estate? Estate is the aggregate of the property or aggregate of an asset of a person, either during his lifetime or the aggregate or totality of property possessed by a person during his lifetime or after his death. That is estate. Your land, your building, your motor vehicle, your plant and machinery, your personal queries, when they sum everything together, is called estate. Annuity. What is annuity? Annuity is a fixed amount of money specified in the trust deed, and it is payable to a beneficiary until the death of that beneficiary. Annuity simply means a fixed payment made by the trustee. Trustee is the person that manages the business. A fixed payment made by the trustee to the beneficiary as contained in the trust deed. Trust deed means the will written by the late person. That is the trust deed. So when it is stated in the will that every year the beneficiary should be given a fixed amount of money, that fixed amount of money is called settlement. Annuitant. Annuitant simply means the beneficiary that receive the annual payment from the estate. Annuitant is the beneficiary that receive the annual payment from the estate. That is annuitant. Life tenant. Who is a life tenant? A life tenant is a person who has a right to income or property held in trust for life. A person who has a right to use a property for life is a life tenant. That means the life tenant is using the property of the deceased person for life. Let me give an example. Chief Kolawole has a property. He has a 2-bedroom flat in Victoria Island. The 2-bedroom flat, one of his cousins is staying in the 2-bedroom flat. In the will of Chief Kolawole stated that his cousin staying in the property should not be evacuated after his demise. After Chief Kolawole is late, he has already stated that in his will that if eventuality happen, this my cousin should not be evacuated. He should be using the property for life. Using the property for life does not mean we should will the property or transfer the property to the person. No. That means that person is a life tenant. Is a life tenant in a sense that he's going to be using the property so far as he's alive. But after that person is late, that person using the property, after his death, the property is going to be taken over. It's going to be transferred back to the trustee. He has a right, life tenant has a right to use the property during his lifetime. He does not have a right that is the owner of the property. No, he can use the property during his lifetime until his death. After his death, the property will be taken over back by the trustee. That is life tenant. That is life tenant. Aside that, we have another concept called will. What is will? Will is a document made by a person on how his asset is going to be distributed after his death. When somebody died with will, that person died with testile. That means that person has a will. He has stated how his property is going to be shared. Then when somebody died without providing a will, that person died in testing. That means it is the administrative court of law that will manage the property, not the trustee. It is the administrator that will manage the property anytime somebody dies without a will in testing. That is on will. Now, we have looked at definition of various terms. Let's look at taxable person under trustee and settlement. Who are the taxable person under trustee and settlement? Who are the people that are going to pay tax under trustee and settlement? Number one person that will pay tax is called beneficiary. Beneficiary or annuitant, they are the children of the deceased person, the children of the dead persons that are benefiting from the estate. They are the beneficiary. Another one is trustee. Trustee is the person that manages the estate on behalf of the deceased person. Trustee is going to pay tax on the remainder income after part of the income has been given to the beneficiary. The remainder income remaining from the proceeds of the business, trustee will pay tax on it. Settlor. Settlor is the person that receives part of the property. Is going to pay tax from the income he's earning from that property that was transferred to him. That is settlor. These are the three taxable persons we have in this topic. what is the basis of assessment or basis period of taxation of trustee and settlements? The basis period is trust and settlement taxation. They are assessed to tax on preceding year basis. That means the income of the last year is going to be assessed to tax this year on preceding year basis. The income of the last year is going to be assessed to tax this year. How do we treat capital allowance in a trust and settlement? In taxation of trust and settlement, how do we treat capital allowance? Immediately the deceased person is late, his property, plant, and equipment, qualified capital expenditure, is going to be transferred to the trustee. Only annual allowance is going to be claimed. Initial allowance cannot be claimed on the asset transfer. And the annual allowance is going to be claimed based on the remaining useful life of the qualified capital expenditure. That is how we treat capital allowance. How do we treat loss in taxation of trust and settlements? In the computation of profit or loss of the estate of the deceased person, we now arrive at a loss. That loss is going to be carried forward and is going to be relieved against future income. Is going to be relieved against future income. What is discretionary payment? Discretionary payment. What do we understand by discretionary payment? Discretionary payment is a payment made by the trustee to the beneficiary as authorized by the trust deed, and it is based on discretion of the trustee. Discretionary payment is made due to time value of money, due to time value of money. Because money don't have value, the fees annuity paid to the beneficiary, as time goes on, it will not have value again. That is the reason why they introduce discretionary payment again. Apart from beneficiary collecting fees annuity, they will also collect discretionary payments. Infant income under settlement. What is an infant income under settlement? Who is an infant? An infant is somebody that is less than 10 years. A baby. Somebody that is still a baby. If an infant receives an income from an estate, is the income subjected to tax? Infant infant cannot pay tax in its own name. Anytime an infant receives an income from an estate, maybe one of the beneficiary, one of the children of the late person is an infant. If he receives an income from an estate, the income is going to be subjected to tax in the name of the guardian. The income cannot be subjected to tax in the name of the infant, because infant is not liable to tax, is not subjected to a tax. Infant cannot do a contract. So that is infant beneficiary. Who is a relevant tax authority to taxation of estate and trust? The relevant tax authority to taxation of estate and trust is the state tax authority, is the state internal revenue service, where the business of the deceased person is located. But when the deceased person has income in more than one territory, he does not have income in one territory. If you have income in one territory, the relevant tax authority will be the State Board of Internal Revenue Service, where the business is located. Federal what? Inland Revenue Service. Indicate the income of the trust, or the income of the estate is coming in more than one different territory. Territory means states. If it's coming in more than one state, the relevant tax authority is going to be who? Federal Inland Revenue Service. What are the offenses and penalties relating to taxation of estate, trust, and settlement? What are the offenses and penalties relating to taxation of estate, trust, and settlements? The offenses and penalties relating to taxation of estate, trust, and settlement include, number one, failure to comply with the provision of the Act, which is provision of Estate Act. The fine is going to be 5,000. Where the offenses of failure is to furnish return, whether you fail to file return, the fine is going to be 100 naira on every day in which the failure continues. Another offenses, failure, or another offenses is when you are making incorrect return, you are filing a return, incorrect return in respect of trustee. The fine is going to be 20,000 naira and double of the amount of tax that is underpaid when you make incorrect return in respect of payment of tax, the fine is going to be 20,000 naira and double of the amount of the tax that is undercharged. Now, let's look at format of computation of tax liability on the remainder income in the hand of trustee. Format for computation of tax liability on the remainder income in the hand of trustee. What are the formats? Income. We first of all report income. The income coming from different sources. Dividend, gross, business profit. For the business profit with less capital allowance. Interest. At the end of the day, we add all the income together. When we add all the income together, we get gross income. Trustee, they are subjected to personal income tax. Trustee, they are subjected to what? Personal income tax. Less authorized payment. Less what? After we get the gross income, we are going to less authorized payment. One of the authorized payments is trustee remuneration. Trustee remuneration can be fixed or variable. Another authorized payment is fixed annuity. Fixed annuity is part of authorized payments. Interest on debt too is part of authorized payments. Why part of authorized payments is also called other administrative expenses. Other what? Administrative expenses. At the end of the day, we are going to total the authorized payments. Once we total them, we minus it from the gross income. If you minus authorized payment from gross income, what are you going to get? You are going to get what is called computed income. You are going to get what is called what? Computed income. After getting your computed income, you will less discretionary payment from the computed income. Once you less discretionary payment from the computed income, you will get what is called net computed income. You will get what is called what? Net computed income. From the net computed income, you can now less frank investment income. Part of the gross income, one of them is a frank investment income. Who can tell me which part of the gross income that is frank investment income.
Dividend.
Dividend. That dividend that we reported here, where this place I bought, assuming the dividend is 10,000 naira, you will come back again after getting your net computed income. You come and remove that 10,000 naira. You will name it frank investment income. You will come and remove it. After you removing it, you will now you will get what is called income available for distribution, which is distributable income. From the distributable income, you will less the amount that you are going to distribute to the beneficiary. You will less distributable income to the beneficiary. If we less distributable income to the beneficiary, the balance you are going to have is the remainder income in the hand of trustee. The balance you'll be having is called remainder income in the hand of who? Trustee. The remainder income in the hand of the trustee now is the income that the trustee is going to pay tax on behalf of the deceased persons. The remainder income in the hand of the trustee is the income the trustee is going to pay tax on behalf of who? On behalf of the deceased persons. After that, you can now less tax relief. You can now less what? Tax relief. You will less tax relief from the remainder income. One of the tax relief we have is called consolidated relief allowance. We are going to less it from the remainder income. If we less the tax relief, we are going to get chargeable income. From our chargeable income, we can now compute tax liability using the personal income tax table. First 300,000, second 300,000, and so on. After we have computed tax liability on the remainder income in the hand of trustee, the second tax liability we are going to compute is going to be tax liability on the total income in the hand of who? Beneficiary. Tax liability on the total income in the hand of who? Beneficiary. How do we compute tax liability on the total income in the hand of the beneficiary? All the income collected by the beneficiary, assuming we have beneficiary A, B, C, D, all the income collected by each of them. Example, fees annuity, discretionary payment, share of distributable income is going to be posted under each of the beneficiary. If it is posted under each of the beneficiary, at the end of the day, the total is going to be accessible income. After the accessible income, assuming the beneficiary have any other income aside from the estate, you can add it. Once you add it, you are going to get the total income. If there is no any other income, the accessible income is the total income. From the total income, you less tax relief, which is consolidated relief allowance for each of the beneficiary. If you less that, you now get taxable income for each of the beneficiary. Once you get taxable income for each of the beneficiary, you can now compute tax liability for each of the beneficiary. These are the format for computing taxation of estate, trust, and settlement. Ladies and gentlemen, we can look at one question. Ladies and gentlemen, we can look at one question.
Alhaji Oluwambe is a trustee of a settlement created by late Chief Jambu in favor of his 4 children, grandchildren, and others. He submitted the following information to Ogun State Board of Internal Revenue for assessment purposes for the fiscal year ended December 31, 2024. Interest received, 3,500,000. Dividend net, 14 million. Rental income, 10,500,000. Business profit, 31,500,000. Miscellaneous income, 5,600,000. Trustees remuneration, fixed, 787,500. Variable, 3% of gross income. Fixed annuity to grandchildren, Ojo, 87,500. Benga, 52,500. Administrative expenses, 4,550,000. Additional information. 1. The trustee made discretionary payments in line with the trustee deed to the beneficiary as follows: Banke, 262,500. Abidemi, 350,000. Sukomi, 437,500. Olajire, 315,000. 2. Each beneficiary is entitled to 1/6 share of 1/3 of the distributable income. 3. Capital allowance agreed with relevant tax authority was 7,350,000. You are required to compute A. Assessable income in the hand of each beneficiary. B. The net assessable income in the hands of the trustee.
Okay, thank you very much. When you are solving this question, the net assessable income in the hand of the trustee means the remainder income in the hand of the trustee. While the assessable income in the hand of the beneficiary means the assessable income in the hand of the beneficiary. How do we solve this question? We need first of all solve B part of this question before we can solve A. B part of the question we solve first. Computation of the name of the man, the name of the owner of the estate is who? Chief Jumbo. We name it, the heading of the solution is going to be Chief Jumbo Estate. Computation of net assessable income in the hand of who? Trustee. For which of the year of assessment? What is the year end in the question? 31st December 2024 is the year end. We know that taxation of trust and settlement is assessed to tax on preceding year basis. That means the year of assessment is going to be 2025 year of assessment. At the end of the day, we are going to look at the item one by one. Let's start from income. The first income we have is what? What is the first income we have? interest received. Interest what? Received. Followed by what? Dividend. This dividend is given to us as net. Anytime dividend or rent or interest is given to us as net, while solving the question, what are we going to convert it to?
We will convert it to gross.
We are going to convert it to gross. If we want to convert this interest to gross, this dividend to gross, it's going to be 100/90. The withholding tax rate on dividend as at time of solving this question is 10%. 100/90 times 14 million. We get the gross amount. The rental income too is gross. The rental income is what? Gross. Is part of the income. Business profit 31 million is part of the income too. Miscellaneous income 31 million. However, one of the income, we are going to deduct one allowance from one of this income. Which income are we going to deduct an allowance for? And which allowance are we going to deduct? Who can tell me?
We will deduct capital allowance from the business profits.
Thank you very much, Miriam. From the business profits, we are going to deduct what? Capital allowance from the business profit. So let's look at the solution. Under the income, we have interest, 3.5 million. Dividend, it is stated in net. We convert it to gross. While getting the gross amount, we get 15,555,556. Rental income, 10.5 million. Miscellaneous income, 5.6 million. Business profit is 31,500,000. With less capital allowance from it. The balance we are going to get after lessing capital allowance is going to be 24,150,000. That means my gross income is going to be what? 59,305,556. I will add all the income together. That is my gross income. According to the format, after getting my gross income, I will less authorize what? Payment. According to the format, one of the authorized payments is what? Trustee remuneration. In the question, how much is trustee remuneration? Where is trustee remuneration in the question? This is trustee remuneration. The trustee remuneration is into twofold. Fixed amount is 787,500. While variable amount of the trustee remuneration is 3% of what? Three percent of gross income. At the end of the day, Part of my authorized payment is trustee remuneration. Fixed 787,500. Variable 3% of 59,305,556. That is the variable trustee remuneration. Is going to give us 1,779,167. Aside from that, part of the authorized payment we have, according to the format, if you check the format, part of the authorized payment we have is called fixed annuity. Fixed annuity. Fixed annuity. In this question of Chief Joe, do we have fixed annuity? Do we have annuity in this question? Do we have annuity? Do we have fixed annuity? Where is fixed annuity in this question? Look at it. This is fixed annuity. Fixed annuity is paid to the grandchildren, Ojo and Benga. Fixed annuity is paid to who? Grandchildren, Ojo and what? Benga. We go and less it as part of our authorized payment. Fees annuity. Under the fees annuity, for Ojo is 87,500. For Benga is 52,500. Apart from fees annuity, do we have interest on debt, which is part of authorized payment? We don't have that in this question. Do we have admin expenses in this question? It's part of authorized payment. Yes, we have admin expenses. 4,550,000. Admin expenses. That means my total authorized payment is going to be 6,469,167. That is my total what? Authorized payment. From my total authorized payment, I will remove it from gross income. I will get computed what? I will get computed income. How much is my computed income? 52,836,389. That is our computed income. From that, I will less what? Discretionary payments. Do we have discretionary payment in this question? Yes. This is our discretionary payment. I will less it from the computed income. Discretionary payment is paid to Banker 262,500. Abidemi 350,000. Sukomi, 437,500. Olagire, 315,000. At the end of the day, the total discretionary payment we have is 1,365,000. If I less discretionary payments, if I less it from the computed income, I'm going to get what? I'm going to get net computed what? Income. How much is net computed income? 51,471,389. If I get the net computed income, I will now less my frank investment income from the net computed income. My frank investment income, which is dividend plus, that dividend plus I used at the beginning of the question, which is 15,555,556. If I less that from the net computed income, I will get income available for distribution. The income available for distribution I'm going to get is going to be 35,915,833. Available for distribution. Once I get the income available for distribution, share of distributable income to the beneficiary. How much the beneficiary is going to share. The question said each of the beneficiary is entitled to 1/6 of the share of 1/3 of the distributable income. That means 1/3 of income available for distribution is going to be the amount each of the beneficiary is going to share. And each of the beneficiary is going to collect 1/6. So 1/3 of income available for distribution is going to be shared to the beneficiary. 1/3 of it is 11,971,944. That is the 1/3 of the share. That 1/3 of the share is 11,971,944. After removing that income that the beneficiary will share, the remainder income in the hand of the trustee is going to be what? 23,943,889. That is where the examiners asked us to stop. That is the accessible income in the hand of the trustee. Now, what is the accessible income in the hand of beneficiary? What is the accessible income in the hand of beneficiary. What is the accessible income in the hand of who? Beneficiary. First and foremost, this 1/3, we are going to share it among the beneficiaries. In this question, how many beneficiaries do we have in this question? Who can tell me how many beneficiaries do we have? How many beneficiaries do we have in this question? We have 6 beneficiaries. Ojo is one of the beneficiaries. Benga is one of the beneficiaries. Banke is one of the beneficiaries. Abidemi is one of the beneficiaries. Sukomi and Olajire. These are all the beneficiaries in this question. This 11,971,944, each of the beneficiaries is going to receive 1/6 of it. 1/6, 1/6 of this 11,971,944. One over 6 of it is giving us 1,995,324. That is what each of the beneficiaries will receive. Once we get share of distributable income to the beneficiary, we can now compute accessible income in the hand of the beneficiary. What are the accessible income in the hand of the beneficiary? What are the name of the beneficiary? Ojo, Benga, Banke, Abidemi, Sukomi. We want to compute accessible income. One of the income that the beneficiary receives from this estate is share of distributable income. Each of them collects 1,995,324. That is what each of them collects. 1,995,325. That is what each of the beneficiary collects. Aside from that, what other benefits does the beneficiary collect from this estate? Who can tell me another benefit any one of them collects? Who can tell me what other benefits that they collect? Who can tell me what other benefits any one of the beneficiary collects? Two of the beneficiaries receive what? Two of the beneficiaries receive annuity. Two of them receive annuity. So while computing accessible income for them, we post it under them, under each of them. Ojo and Benga receive annuity. So we will write fees annuity. Ojo receive 87,500. Benga receive 52,500. Aside that, 4 of the beneficiaries receive discretionary income. Banker receive 262,500. Abidemi receive 350,000. Sukomi received 437,500, while Olagire received 315,000. These are all the benefits received by the beneficiary in this estate. At the end of the day, we are going to total all of them. For Ojo, his total accessible income is what? 2,082,824. For Benga, his total accessible income is 2,047,825. For Banke, is 2,257,824. For Abidemi, is 2,347,324. For Sukomi, is 2,432,824. While for Olagire is 2,310,324. That is the accessible income received by each of the beneficiaries. Do we have any question? Any observation? Do you have any question? Any observation? In the absence of no question, by next week, we are going to solve 2 more questions on taxation of estate and trust. By next week, we are going to solve 2 more questions on taxation of estate and trust. Thank you for having me. Have a nice day.